So, as a mortgage agent, I have access to over 30 lenders, including some of the big six banks. But probably 8 or 9 times out of 10, when I'm putting a mortgage together for a client, I go with a non bank lender over a bank lender. And I'll explain why. Reason number one tends to be terms and flexibility. Non bank lenders tend to have more generous prepayment privileges. Uh, and they also tend to have way lower penalties. On average, a bank penalty is 2 to 3 times the size of a non bank penalty. So if you're going to break your mortgage midterm, the way that the banks calculate their mortgage penalties tends to be significantly larger than non bank lenders. So there's a lot more flexibility with a non bank lender. The second reason tends to be customer service. From the standpoint of some of the banks, their post kind of closing customer service means you call a 1-800 number. There's no kind of personalized service, and in some cases, you can't go through your broker to actually make changes to your mortgage. With a non-bank lender, your broker can answer 80 to 90% of your questions about your mortgage, can even find out the current balance, find out the penalty if you were to pay it out early, can help you make additional extra payments or lump sum payments, can change your monthly payment. So, from the standpoint of customer service, the non bank lenders very often offer a better customer service experience for the client. Um, Finally, from the standpoint of rate, and this isn't always the case. In some cases, some of our banks will offer a promotional rate or an excellent rate. But on the whole, the non bank lenders tend to be very competitive when it comes to interest rates. So we tend to get more flexible terms, more generous prepayments, lower penalties, um, better customer service, and lower rates with non bank lenders. What is the risk to you? The risk is very little because, in fact, they're not holding an asset for you, that you owe them money. And if something were to happen to a non bank lender, um, thankfully it has not happened significantly in Canadian history, but if something were to happen, they would likely get absorbed by a larger lender. You would continue to make your payment as you always did. Unfortunately, you couldn't stop making your mortgage payment. So, thankfully, this hasn't really been our experience in Canadian banking history. We haven't had a number of non-bank or even bank lenders go under, but we have had non-bank lenders who've been purchased by larger institutional lenders. So, from a risk standpoint, there's very little risk. You would pay your mortgage as is, and you would continue to deal with the mortgage broker or agent who set up the mortgage for you. So if you've got any questions on this or you have any comments, I'll put a little click here. You can set up a call or set up a meeting, and I'd be happy to speak with you. All right. Have a great night. Speak soon.